Welcome back to Investing Talk Podcast. We're here to help you cut through the noise and get straight to the essential insights. Today, we're focusing on a pretty highly anticipated event in the crypto mining sector, the upcoming earnings report for Bitfarms. This company is a key player in the Bitcoin mining space, and its performance often gives us a direct read on the broader industry. Absolutely. We've put together some really detailed analysis on Bitfarms' pre-earnings setup. We're looking at everything from what analysts expect to their historical performance and, of course, the current market environment. Our goal is really just to make sure you walk away truly well-informed about what matters most with this report, what to watch for. Okay, sounds good. And before we unpack all of that, just a quick reminder. If you find this kind of detailed breakdown valuable, please do hit that subscribe button, maybe like this episode, and leave us a comment. Your feedback really helps us immensely. And if you want to support us further, you could consider buying us a coffee. Also, and this is important, if there's a specific company you'd like us to look into for a future analysis, just leave a comment below with its name. We genuinely love hearing from you. Okay, let's get into this pre-earnings analysis for Bitfarms. First things first, when is this report actually dropping, and what's the street consensus looking like?
Right, so Bitfarms is scheduled to report its Q2 2025 earnings on August 12, 2025. That's before the market opens. And there'll also be a conference call at 8:00 a.m. Eastern Time for, more details. Now, when we look at the analyst consensus, the expectation for revenue is around $67 million for Q2. What's notable here is that this is actually very close to the $66.85 million they reported back in Q1 2025. So it suggests maybe a period of stabilization on the top line.
Okay. Stable top line. What about the bottom line? Earnings per share.
Yeah, for earnings per share, or EPS, that crucial measure analysts are forecasting a loss of negative 0.0003 cents per share for Q2. Now, while that's still a loss, the subtle positive here is that it does represent a narrowing of losses year over year. So it suggests maybe some progress on efficiency, even with the headwinds.
Interesting. Okay, is there a whisper number floating around for Bitfarms?
Yeah.
That sort of informal estimate that can sometimes give us a hint?
That's a good question. Interestingly, for Bitfarms' upcoming quarter, there isn't really a widely reported whisper number out there in the public domain. This often suggests maybe a less dramatic divergence of expectations compared to some other stocks.
Okay, so the market and analysts are kind of aligned.
Seems that way. It means you probably shouldn't expect a huge pre-report surprise based on whispers alone.
Got it. And what about the company's own guidance? Have they given us any specific numbers to aim for? That can sometimes be the most telling part, right?
Well, Bitfarms hasn't provided explicit guidance for Q2 2025 in their recent public communications. Their previous reports tended to focus more on cost discipline and just navigating the really volatile Bitcoin pricing environment, less about specific forward-looking revenue or margin projections.
So the lack of explicit guidance isn't necessarily a red flag, but it means we're flying a bit blind until a report.
Kind of, yeah. It just means we'll be relying more heavily on the actual reported numbers and, importantly, the management commentary during the call to really gauge their outlook.
Okay, so if that's the current setup, how has Bitfarms performed historically, in relation to these kinds of expectations? Do they tend to surprise, or are they pretty predictable?
If we look back, say, at their last 4 quarters, Bitfarms generally reports pretty much as expected, or maybe with only minor variances. For instance, back in Q1 2025, their EPS was a negative 4 cents, which actually met consensus. And the revenue, $66.85 million, was only slightly below the $67.17 million consensus, so very close.
So a history of being pretty much in line.
Yeah, exactly. Prior quarters also show a historically low frequency of major surprises. This predictability means the market usually doesn't react with massive swings right after the report hits the wire.
Right. And speaking of swings, what does happen to the stock price right after these reports? Does it tend to move wildly, or is it more, subdued?
It's tended to move generally within the market's implied expectations based on options pricing. After Q1 2025, for example, the move was actually quite muted. Pretty quiet, which reflected that lack of a material surprise. And similar modest reactions have been seen in prior quarters, too. The moves are usually contained within what the options market was predicting for volatility.
So not typically those huge, dramatic post-earnings gaps you see sometimes.
Less often for Bitfarms, yeah. It's quite different from maybe some other high-growth sectors or tech names.
Okay, so the stock price might not be a roller coaster right after earnings, but that doesn't tell the whole story. Let's peel back another layer. What about the underlying business metrics? What trends have we been seeing there?
Right, the fundamentals. Well, we've seen revenue remain relatively stable, as we mentioned, close to Q1 levels, but it's definitely been under some modest pressure, mainly due to the, let's face it, highly volatile nature of Bitcoin prices. That's the biggest driver.
And margins. I imagine that's where the pressure really shows up.
Absolutely. Margins continue to be challenged, primarily by two big things: energy costs, which are a huge input for miners,
Of course.
and the increasing network hash rate. That's the total computing power mining Bitcoin globally.
Right, more competition makes it harder to mine each coin.
Exactly. The more hash rate there is, the harder and more expensive it becomes for any single miner, like Bitfarms, to secure new coins. It directly hits their profitability. So operating income has been negative, which, isn't ideal. But here's maybe a crucial point. The year-over-year EBITDA margin trends actually show some stabilization.
Stabilization. How so?
It seems largely due to their cost control efforts. They've been very focused on discipline there. This isn't just about cutting expenses randomly. It might signal a shift towards operational efficiency that could position them better if or when Bitcoin prices stabilize.
So management might be building some resilience.
That's the potential implication, yes. Suggests they're trying to be strategic in a very tough market.
Okay. Beyond the raw numbers then, what significant news or broader trends during the quarter might have influenced Bitfarms' operations? Any specific company catalysts?
Well, during this past quarter, there haven't really been any major product launches or, groundbreaking initiatives for Bitfarms. Their focus seems to have really been on optimizing the operations they already have and navigating the ongoing consolidation we're seeing within the crypto mining industry. Lots of M&A chatter out there.
So more about efficiency and maybe positioning within the sector.
Pretty much. They did expand their mining capacity marginally, just a bit, and took some additional steps to reduce operational costs. It all aligns perfectly with their stated focus on cost discipline. So think refinement, belt tightening, rather than big new ventures this quarter.
And how have the larger sector and macroeconomic trends been playing into this? Because for a Bitcoin miner, those external forces are just massive.
Oh, absolutely critical. Bitcoin price volatility remains the dominant factor, right? Heavily influencing their financial results. Can't escape that. And as we touched on, the global hash rate has continued its upward climb.
Which means more competition.
Exactly. It directly translates to more competition and pressure on profit margins across the entire industry. It's like, imagine more and more prospectors chasing the same amount of gold, needing bigger and better tools just to get the same share.
That's a good analogy. Makes efficiency paramount.
Totally. This escalating competition means companies like Bitfarms are essentially in an arms race for efficiency. Every single kilowatt hour saved is a direct boost to their bottom line, makes those cost discipline efforts not just important, but absolutely critical for survival, really.
What about energy costs specifically? Still a major headwind.
They have persisted as a significant headwind, yes, although there's been maybe some recent stabilization in energy prices in certain regions where they operate, which could offer minor relief, but it's still a big line item.
And regulation. Anything new on that front impacting them this quarter?
Regulation. Well, the discussions about crypto mining, particularly in North America, are definitely ongoing. Lots of talk. But we haven't seen any direct negative announcements or new rules that specifically impacted Bitfarms this quarter. That said, any shift in regulatory clarity, positive or negative, could significantly alter the landscape down the road. It's always a background risk.
So given all these factors, the Bitcoin price, the hash rate, energy, regulation, what are the analysts saying now about Bitfarms' prospects? Has sentiment shifted recently?
Analysts have generally maintained pretty cautious price targets. They consistently point to those margin constraints and the dependency on Bitcoin pricing as the key variables influencing the outlook. There hasn't been much significant change in ratings recently. The overall sentiment seems to be mostly neutral, maybe leaning slightly bearish.
So watchful waiting seems to be the name of the game for analysts.
That sums it up well. They're not seeing immediate catalysts for a big move up, it seems. More like, let's see how they navigate these pressures.
Okay. Beyond the fundamentals and analyst views, the market often tells its own story through the stock price action itself. Let's pivot to the charts. What's the technical picture looking like for Bitfarms shares heading into this report?
Right, the technical setup. Well, in the couple of weeks leading up to the report date, Bitfarms shares have largely been trading sideways, kind of stuck in a range. This typically reflects somewhat muted expectations and maybe a low conviction from either buyers or sellers ahead of the actual numbers.
So no strong trend going into earnings.
Not really. Any modest upticks we've seen have tended to fade pretty quickly. Buyers just aren't showing strong conviction to push it significantly higher before they see the results and hear from management. It's a classic wait and see pattern on the chart.
Okay, with that sideways trading in mind, what are the key price levels we should be watching? Support where buyers might step in and resistance where sellers might emerge after the report.
Good question. Looking at the charts, key support for Bitfarms seems to be down around the $1.12 to $1.15 area. That represents the recent multi-week lows.
Okay, $1 to $1.15 on the downside. What about upside resistance?
On the upside, resistance looks to be in the $1.35 to $1.40 range. That area reflects some recent reaction highs where rallies have stalled out.
Got it. So those are the key zones to watch post-earnings. A break below support or above resistance could signal the market's real reaction.
Precisely. Those levels could indicate a new short-term trend depending on how the earnings are received.
And what about the options market? What are those forward-looking bets telling us about how much the stock is expected to move after earnings? What's the implied volatility?
Yeah, the options market is currently pricing in an approximate plus or minus 12% move for Bitfarms around this earnings event, give or take.
12%. How does that compare historically for them?
Well, what's kind of fascinating here is that this 12% is right in line with the historical averages for Bitfarms' quarterly reports. It suggests the market expects a fairly typical reaction, rather than anticipating some massive outlier event, positive or negative.
So traders are betting on a consistent level of post-earnings volatility based on past performance.
Seems that way. No signs in the options pricing of expectations for an unusually large swing this time around.
Okay, interesting. So knowing all this, the consensus, the history, the technicals, the options market, let's talk potential scenarios. What could actually unfold after the report? Let's start with the bull case. What would need to happen for the stock to see significant upside?
Right, the bullish scenario. Well, ideally, Bitfarms would need to report a smaller loss than that negative 0.3 expectation. Or even better, maybe reach break even on EPS. That would definitely be a positive surprise. And coupling that with revenue that manages to beat the $67 million consensus estimate would be key.
So beat on both top and bottom lines. What else?
Beyond the headline numbers, guidance would be huge. If management points to genuinely improved margins because their cost reductions are really working, where they found more efficient operations, that would be a big positive. And then any positive commentary on things like their network expansion plans, maybe greater regulatory clarity emerging in the industry, or even just signs of Bitcoin price stabilization. Even a subtle shift in tone on those external factors could drive significant upside. It's really about exceeding those already cautious expectations, right? Showing they're gaining an edge in what everyone knows is a tough environment.
Makes sense. Exceeding cautious expectations is the key. Now, on the flip side, what would trigger a bearish reaction? What could cause a material downside move for Bitfarms?
Okay, the bearish case. That would likely involve Bitfarms missing consensus on either revenue or EPS, particularly if the miss is significant. Also, if the company commentary points to continued margin compression, maybe talks about rising cost inflation they can't control, or highlights challenges in scaling their mining capacity effectively, that would be negative, especially if it contradicts their cost-cutting narrative.
What about guidance in the bearish case?
Yeah, weak guidance for the next quarter would be a big red flag. Or any overly negative commentary regarding the regulatory environment, or maybe projecting continued difficulty with Bitcoin prices. Any of that could trigger a material downside move.
It raises that question, doesn't it? How much will the market tolerate these external pressures if management can't show a clear path to mitigating them?
Exactly. That's the tightrope they're walking.
So with all these different variables and potential scenarios swirling around, what's the one key metric you'd really recommend listeners focus on above all else in this report, if you had to pick one signal in the noise?
The single most important metric. If we connect this to the bigger picture of their business viability, I think investors should focus very, very closely on the mining margin.
Mining margin. Okay, break that down a bit.
Yeah, this includes their gross mining margin, definitely, but also listen closely to any commentary specifically about energy costs and their operational efficiency gains. These factors are just crucial because they directly drive profitability, obviously, but they also provide that forward visibility in the current sector environment.
So it's the engine of their business, essentially.
You could say that. A strong or even better and improving mining margin despite all these external pressures would be a really powerful indicator of their resilience and maybe their competitive edge. That's what I'd watch most closely.
Got it. Mining margin is key. All right, bringing it all together now,
Right.
what's your overall leaning for Bitfarms' upcoming earnings? Bullish, bearish, neutral. It may be. How confident are you in that assessment?
My overall leaning for this report is neutral. Yeah, neutral. And my confidence score in that is probably about a 5 out of 10.
Neutral with only 510 confidence. That sounds cautious. Why so neutral? And why the middling confidence?
Yeah, it does sound cautious, doesn't it? The rationale really is that Bitfarms' results are just so highly dependent on those external variables we keep mentioning, primarily the Bitcoin price and energy costs. These things make short-term forecasting particularly challenging, almost a guessing game sometimes. Plus, as we discussed, analyst expectations are already quite low, and their previous quarters have resulted in pretty muted post-earnings reactions.
Suggesting the market is already pricing in a lot of the challenges.
Exactly. It suggests the market is quite well calibrated to the likely outcomes. So there might not be huge surprises baked in, which supports that neutral stance. It feels less like a setup for a big directional bet and more about checking in on their operational stability amid the storm.
Okay, that makes sense. So for listeners thinking about this report, maybe considering a trade or adjusting a position, what are some strategy considerations given this neutral outlook and the inherent volatility?
Right, strategy. Well, for more risk-averse investors, honestly, it might be preferable to just stay on the sidelines for this event. The sort of binary risk associated with Bitcoin's price swings plus the general volatility of the mining sector just makes it a less predictable environment for a definitive pre-earnings bet if you're cautious. Too many unknowns outside management's control.
Okay, sidelines for the cautious. What about more risk-tolerant traders?
For traders who are more comfortable with risk and maybe expecting some volatility, remember that implied 12% move the options market is pricing in.
Yeah.
Well, if you think the actual move might be larger than 12%, perhaps due to near guidance or some unexpected sector catalyst, then a market-neutral option strategy could be interesting. Something like a straddle or a strangle. These plays aren't about predicting if Bitfarms goes up or down.
Right, they bet on the size of the move itself.
Exactly. They bet on volatility. You could potentially profit regardless of direction if the stock moves significantly more than that priced in 12%. It's a pure play on the post-earnings swing, potentially exceeding expectations.
Interesting possibility for active traders. And for those already holding Bitfarms shares long-term.
For long-term holders, I'd say careful position sizing is definitely advised, as always in this sector. Just remember, the core business remains highly leveraged to the volatile crypto market, much more so than factors management can directly control day to day. So understanding and managing that exposure within your overall portfolio is absolutely key.
What a comprehensive look at Bitfarms' upcoming earnings. It really highlights the tightrope acts these miners are constantly performing, doesn't it? Balancing those huge external pressures with internal efforts on efficiency and cost.
It really does. A tough business.
So what does this all mean for you as you watch this earnings report unfold? Maybe consider how the management's commentary on navigating those external pressures, the hash rate, energy costs, Bitcoin price, might provide the real story, perhaps even more so than the immediate headline numbers.
Indeed. Always remember that understanding the drivers of the numbers, the why behind them, is almost always more valuable in the long run than just the numbers themselves. That's where the true insight usually lies.
Well said. That's it for this detailed analysis of Bitfarms. Thanks so much for joining us on Investing Talk Podcast. We'll be back soon with another exploration into your sources. Until then, happy learning.